Hey traders, I'm Loaded Forex, aka no signal, no entry. In today's video, I want to show you my simple profitable day trading strategy that I've been using for many years now. I wish I knew this strategy when I started Forex trading many years ago. I failed woefully. I blew so many trading accounts, both personal and prop frame trading accounts. I was at the point of giving up when I found this profitable day trading strategy that changed my life. Since I have been using this strategy, my trading performance has improved 100%. I have been winning back to back, making consistent profit in the market every week. If you are tired of complicated trading strategy, you are still losing money, you don't know what to do, you are planning to give up in trading, or you feel like trading is a scam, don't worry, you are not alone. I was once in your shoe when I started many years ago. In this video, I'm going to show you the exact blueprint, the exact steps that I took, my trading entry, my exit, my trading approach that I took many years ago that changed my life up to today. Do yourself this favor by watching this video from the beginning to the end so that you can learn everything you need to succeed in trading in this video. If that sounds good, don't forget to click on the like, subscribe, and turn on the notification button so that you can get notified whenever we upload another exclusive video tutorial like this. And I will see you after the intro. This simple trading strategy that I want to show you in this video is a strategy that you need to backtest to confirm how effective it is. What I use for this day trading strategy is 50 EMA. And what is the meaning of 50 EMA? Let's go to Google and search for it. The 50 EMA strategy is a technical analysis trading strategy that uses the 50-day EMA to identify the direction of the trend and to generate buy and sell signals. This strategy is typically used by traders who are looking to capture medium-term trends in the market, and it is often combined with oscillators and momentum indicators. The first step, go to indicator, type EMA. When you type EMA, it's going to bring out moving average exponential. Click on this moving average exponential and it will appear on your screen. Then go to the settings, click on settings, click the input tab, then you set this length to 50. Under the sorting, click on type, then change it to EMA, then click OK. Automatically it's going to appear on your screen. You have to pay close attention to what the price action is doing in the market. Let's assume these are moving average. Whenever the price action is moving or trading below this moving average, it's a sign that the sellers are the one in charge of the market. And whenever the price action is also trading above the moving average, it's a sign that the buyers are the one in charge of the market. So when the buyers are the one in charge, you should be looking for buy opportunity to the upper side, and whenever the sellers are the one in charge of the market, then you should keep on looking for sell opportunity to the other side. When you realize that the trend is above the moving average, which is 50 EMA, don't trade against it. Or when the trend is below the 50 EMA, don't trade against it. In this video, I'm going to show you the exact approach you are going to use to make a lot of money in the market. This is gold market. The price action is trading below this moving average, right? That means the sellers are the one in charge of the market. But in a situation whereby you realize that the price action is now trading above this moving average, then you have to change your bias to buy setups only. You don't have any business with sellers anymore. Whenever you realize that the price action is already trading above the moving average, the price action invalidate the moving average to the upper side, you have to switch your bias to buy sentiment. Now, when the price action break this moving average, then you have to establish the last highest point that the price action reached before the major pullback. So once we establish this resistance here, then wait for the price action to retest the moving average. Once you realize that the price action is at the moving average, or price action mitigate the moving average, which is 50 EMA, then exercise a lot of patience, wait for price to break this last resistance that you establish around this zone here. So after the break of this resistance around this zone here, execute without hesitation by using your long position tool, then you target twice of your risk to reward. Right now the price action is trading above the moving average, and price is kind of like giving us a pullback phase. Then you establish your resistance. This phase is serving as a turning point, the last resistance that is causing this major pullback to retest our 50 EMA around this zone. So you have to exercise a lot of patience. Make sure that the price action mitigates this moving average. Now, after the mitigation of this moving average, establish your support key level zone. So we are having two sides on chart right now. We have the resistance and we have the support. So if you look at it now, it's going to serve like a ranging zone, like price is kind of like consolidating, right? But what you have to do right now is to wait for bullish candlestick to close above this resistance. After the breakout, then execute without hesitation. So let's play the candlestick. Now price action finally invalidate this resistance to the upper side. Then make use of your long position to put a stop loss below this support here. Then you target twice of your risk to reward. Remember, this is a day trading strategy. You are not coming to the market to come and waste your time or to leave money on the table. So let's play the candlestick. Now the price action smashed our take profit without stress. On GPB chart, you can see that the price action is trading below the moving average. And whenever you realize that the price action is trading below the moving average, is a sign that the sellers are the one in charge of the market. Right now, you have to wait for price action either continue to sell down, give us a pullback here, then we take a sell opportunity here to the downside. Or if price action change the direction to the upper side by invalidating the moving average to the upper side, we have to wait for price action to retest this moving average here. Then we establish our resistance here, wait for price action to close above this resistance, then we execute our entry around the zone here, then we target twice of our risk to reward. Now the price action is trying to break the moving average to the upper side. Right now price action invalidated this moving average. So where is our resistance? This will serve as our resistance. Then the price action is retesting the moving average. So what we have to do, let's wait for bullish candlestick to close above this moving average to the upper side. Finally, price action invalidated this resistance to the upper side. Then we make use of our long position too. Then we place our stop loss below this support zone. Then we target twice of our risk to reward. So let's play the candlestick. Finally, price smash our take profit without any stress. If you look at the price action around this zone here, right, the price action is already trading above the moving average. That shows that the buyers are the one in charge of the market. So what we have to do now is to exercise a lot of patience. The price action retested this moving average already, and this zone served as support, and this space was the last turning point that served as resistance. So we have to exercise a lot of patience and wait for price action to either break above this or price change direction to the downside. Then wait for a retest at the moving average. Then we mark this place as our support. Then wait for price action to close below the support so that we can take sell opportunity. And let's play the candlestick. Right now the price action failed to close above this resistance after mitigating the EMA around this zone here. So it seems like the price action has changed the structure to the downside. We are not in a bearish market. Why? Because it was a bullish market structure, higher low, higher high, higher low, then price created equal high, then price changed the structure by invalidating the last higher low around this zone here. The structure is back to bearish structure, and the price action is also trading below the moving average. Then we have a valid information that the sellers are back in the game. So what we have to do is to exercise a lot of patience, wait for price action to create a support zone. We serve as a key level zone for us to establish our rectangle tool. Then we wait for price action to retest this resistance zone. After the price action retests this resistance zone, don't forget this approach, this blueprint. Wait for price action to close below this support before you execute your trade. So let's see what the price action will do right now. Price action successfully closed below the support zone with a strong bearish momentum candlestick pattern. So let's make use of our long position tool. Then we place our stop loss above this zone here. We target twice of our risk to reward. Price action smash our take profit levels zone. Looking at the chart of EURUSD right now, you realize that the price action is already trending to the downside by creating this bearish market structure: high, lower, low, lower, high, lower, low, lower, high, lower, low, lower, high, lower, low, lower, high, then lower, low. Right now, the sellers are the one in charge of the market. Another thing, price action is already trading below this moving average. That's double confirmation. Wait for price action to create a major support zone that serves as our pullback to retest this resistance zone. Let's see what the price action we do right now. Price action did not retest this moving average, so we are not going to take any opportunity right now. Make sure that the candlestick tap the moving average before you take any sell or buy setup. If the price action did not mitigate the moving average, don't take any position in the market. Don't execute any order. You have to ensure that after the pullback, price tap or mitigate the moving average. So let's play the candlestick and let us see whether the price action or the candlestick will still go back to mitigate the moving average. So let's see what the price action is. Finally, the price action mitigated this moving average. So this place will serve as our major support key level zone. Then this zone will serve as our resistance zone at the moving average. So we have to wait for price action to mitigate the support zone to the downside so that we can take our sell position. So let's play the candlestick. Right now, the price action finally mitigated the moving average to the downside. So we execute around this, we place our stop loss above here. We target twice of our risk to reward. Let's play the candlestick. Right now, the price action is moving towards our take profit zone. Price finally smashed our TP level. What you need to do after watching this video, go back to your charts, backtest this strategy for a period of 3 months or 6 months. You need a minimum of 3 to 6 months to confirm whether a strategy is profitable or is not profitable. Don't forget that losses are part of this game. Trading or forex market is a game of probability. Sometimes you win some or you lose some. But when you are winning, make sure you win big. And when you are losing, make sure you lose small. If that sounds interesting, don't forget to click on the like, subscribe, and turn on the notification button so that you can get notification when we upload another exclusive video tutorial like this. If you are also interested to join our free signal on Telegram community, don't forget to click on the link below this video description, and I will see you next time.